that. So,
That's just a few.
What do you want to talk about dividend irrelevance?
Yeah. All right. So we're Trojan horsing some dividend conversations. Dividend, it's totally his idea, by the way. As you can see by his name.
Idea.
Look at his name. He denies it now. He's trying to gaslight me.
I'm going to remove my name.
Of course, Dividend wants to talk about dividends. Just saying. But there was a guy who came on Strongman's channel. And I like the guy, so it's not like a diss on him. And he came from the academic side of talking about dividend irrelevance theory. I don't believe dividend irrelevance theory holds a place in the practical world. There are, like, I understand the premise where I think the main message is that you should not be focusing on companies that pay a dividend per se, but to compare and equate a dividend to selling a stock, I think is where I have a huge disagreement in. And I want to, let you say your take before I continue on that thought.
Well, the people, we talked about this a little before, but dividend irrelevance theory came from two guys who wrote a research paper basically in the 60s. So I don't know if people that spout that know where it came from. In their research, they made assumptions when they made assumptions about like the markets to make this theory, this dividend irrelevance theory. And I can go through those theories. Basically, it was like I'll pull it up, but they made assumptions about the world to make this theory that don't exist, basically. And I have research papers that refute their theories about it also that came out later. So in the real world, their theories are not practical.
What were some of their assumptions, if you remember them off the top of your head?
Was it taxes played no part in, I think, their considerations, and they assumed information was readily available and free to every investor. So every investor wasn't it like the same equitable information at all times? So their theory is based on things that are just not true. I mean, there are equitable, information. It's getting better.
Yeah. Well, even okay, so like part of the dividend irrelevance theory premise is that if you really want to earn value from your investment, you should just sell the investment. My problem with that is selling shares of a company and receiving a dividend from it is completely two different transactions. I know that on the surface, it looks like the same thing. You sold a company for here we go. Thank you. So let's talk about assumptions of the theory. Taxes do not exist. I'll continue my point after we read this. Taxes do not exist, personal income taxes or corporate income tax. All right, fair. When a company issues stock, there are no flotation costs or transaction costs. I guess we can put that to the side. When a firm decides its capital budgeting, dividend policy has no impact on it. That is totally not true. Already, that right there is not true. Information is ready for available to all investors. That's not true, but information about the firm's future prospects available to leverage has zero impact on the cost.
You like that?
What the hell?
So these are the assumptions, like people. Yeah, these are the assumptions their theory was created under when they said dividends are irrelevant.
But I don't know if this article touches upon this, but like, okay, Dan, would you agree that if you do you own McDonald's shares currently?
Yes.
So when you sell a McDonald's share, what are you selling in principle? Like what are you selling?
An ownership stake in McDonald's.
All of the.
Yeah.
Oh yeah, what were you about to say? You were about to say it.
And all their future like business activities or
all the assets that they have. And assets are defined as, things that have a presumed productive value in the future. All right, that they will produce value into the future, and liabilities are the opposite. They'll take value in the future. They're owed. So when you sell shares of McDonald's, you're selling the property, plant, equipment. You're selling the branding. You're selling the real estate. You're selling all of it. You're also selling the liabilities, but you're selling everything. And that is much more costly than, let's say, what a dividend is. A dividend is simply the cash account is being depleted, and then the cash, which is a different kind of asset, is being deposited into your bank account. So if you accept dividend irrelevancy theory, and also are then saying that if you want to derive value from your investments, you should then sell shares, you are then claiming that all assets on the balance sheet are the same, which is, well, I mean, if anyone has taken, basic accounting, you would learn that we have different classifications for assets, and cash is its own asset class. And then you have, your current assets, which is your subcategory of assets, current assets, and then you have your long-term assets. And then you go from, in GAAP accounting, you go from the most liquid to the least liquid. So when you're paying that dividend and you're depleting the cash position, right, you're just removing one type of asset from the business and deploying it into your pocket. But when you sell the business, you're not just removing that one type of asset. You're getting rid of, like I just mentioned with McDonald's, you're getting rid of the branding, which who knows what the value is of that. You're getting rid of the real estate. I don't know what the value is of that off the top of my head. You're getting rid of the PP&E. You're getting rid of all the future potential projected value of all those assets. Versus a dividend is just a cash injection, current asset depletion. That's it. So I think a lot of that academic stance stems from people who probably have never owned a business. So I own shares of a privately held business, and I receive dividends from them. And that's the election of how they choose to return capital to shareholders. There's no buybacks because it's not publicly traded. There's no buyback potential whatsoever. Quite literally, imagine if this was the case and they told me, Fabio, to the end of time, you will die and we will never return any capital to you. I don't even know how to necessarily even value that. And it's like, if they said this to me, even if you sold it to someone, we will never give them a penny. So then I have to go I'm going to pick someone from chat, Dex. Hey, Dex, I'm going to sell you my shares of this company. You're probably going to ask, hey, well, what's in it for me? And I say, hey, Dex, give me $1 million. And you're rightly so going to ask, okay, what are the fundamentals of this business? Well, why do you want to know the fundamentals? The reason why you want to know the fundamentals is you want to know what is your return potential. Well, what if it's not publicly traded and you don't really have that aspect? Remember, you're supposed to think about your publicly traded companies just like how you would think about a privately traded company. So apply the same philosophy here, but we'll get to how this applies to public in a second. And you say, oh, actually, can I work through this example with you, Dan? Because you can talk back to me. Dex will have to type. Dan, can I sell you my company for $1 million?
Okay, I get.
What would you want to know? Or you just say yes and take the deal?
I want to know how much debt you got.
Okay, we have no debt.
No debt. Do you own any land?
Yes, we own. The company owns
land, buildings, equipments, all that.
Yeah, the company owns $5 million in land.
What else do I want to know? How much cash you have and cash equivalents?
$2 million.
Okay. What else do I want to know?
Oh, there's a caveat. Can I tell you the caveat?
What?
When I sell you these shares, you will never receive a penny from this company.
Yeah, I'm out.
Why? But why? Why are you out?
I want money.
But they have all these assets.
No. But I'm not going to get any of it. So.
But what do you mean? They have all these assets on the books. I don't understand your reservation, Dan. Why won't you give me $1 million for my shares?
because I will never partake in the business's, future prospects.
But you can always find some other schmuck to buy it off of you.
Doesn't help me personally though. But
so you're saying you don't want to take on the risk that you would have to find some other schmuck to buy it off of you, but you're not lying to them. This is legitimate. They have all these assets, but I somehow have the future knowledge to tell you they will never return any capital to you. And there's no buyback or anything, right? So we're getting into a philosophical standpoint of investing. Okay, no, it's not an ADR in China. We're getting to a philosophical standpoint of investing, which is, why does Google have value, right? Google's not paying you a dividend, and for a while, Google didn't do buybacks. Why does it have any value? Because you're valuing the future potential. If somehow you had the knowledge that Google, to the end of time, would never return capital to shareholders, neither dividends, no buybacks, no nothing, then you would have a case to say, well, what's the value? The only value is derived from what I can sell it to someone else. But you never have that knowledge in terms of understanding, hey, that company will never return value to me. So it's always the presumption. That's where we stand with in investing. With dividend irrelevancy theory, you are equating some will say the buyback is the same thing as a dividend. That's the second point. How do you feel about that? Because we talked about how, you could just sell shares. But what do you think about, a buyback is the same as a dividend?
I always hear people say it's funny. They'll be like, I like buybacks, except they need to time them right. But then you look at all the companies, nobody times their buybacks right. Like they just buy at a steady, consistent pace. They don't look at the share price. So what is that? When people say, I like share buybacks as long as it's done properly. It's like, well, what the hell does that even mean?
I have a question for you, because this is I don't know why no one points this out about the destruction of usually dividend irrelevance theory proponents. I haven't mentioned this before, so your channel is the first time that gets to hear me say this, because I haven't had the time to bring it up. But I don't know why I didn't bring it up before, honestly. What is a common criticism of dividends? That the price moves when they do the dividend?
On next dividend date, the stock price goes down.
Yeah, right. So we'll talk to exactly why that happens. I've addressed that one before. But hey, what happened to buybacks?
Well, they have to take the cash. Actually, I don't know. What's the accounting entry? I don't remember.
Well, no, they're removing cash, right? They're taking away cash.
You're removing cash from the business,
and then they're reducing the share count simultaneously. So what? It's like it's netting out, right? That's like the presumption, I guess, that they just presume. And so the net benefit is the buyback irrelevant, is what I'm getting at.
Ooh.
Is the buyback now irrelevant? Because you're removing cash from the business.
Yeah.
And you're reducing the share count. The other one is you're removing cash from the business, but
there's no benefit. There's no benefit to the business itself. So
yeah. What is it? Because I don't believe a buyback is relevant, just as I don't believe a dividend is relevant. I believe they're both relevant. They are the ways that you as the investor get rewarded. In the case of a publicly traded company, a buyback is beneficial because a company can do that. If it was private, it'd be a little harder. They'd have to go to each individual shareholder and say, are you willing to sell your shares? Are you willing to sell your shares? Oh, you're willing to sell your shares? Okay, we'll buy them off of you at this price. You willing to do that? Okay, cool. And then the remaining shareholders will, and that's how you can do, you can get a buyout, right? And that actually, if a lot of non-publicly traded companies, they might have that policy where they say, hey, we're not going to do distributions to our shareholders because let's say we're not an S corp. Because if you're an S corp, you kind of have to do the distribution because it's a pass-through entity on taxation. Same with a partnership. But if you're a C corp, for example, not to get too technical on everyone, it could be possible that the company says, hey, we're not doing a dividend, but if you want, cash, you can sell your shares back to the corporation, and then we'll work out some agreement. You want some cash now. That's still a form of having access to that liquidity. And that negates the previous scenario of when I said, well, I'm trying to sell a company to Dan, and he knows he's not going to get anything from that. So I was trying to establish the concept of the value of your investment is simply what the investor can derive as value in the future. That's what I was trying to establish, if I didn't make that clear enough to the audience. And then dividend irrelevancy theory is interesting because one of the things they say is, of course, it's irrelevant. Oh, come on, get out of here. I don't want no. Yeah, get out of here. Whoa.
Just saying.
It's all about when you buy. You know the meme of the guy who's crying, but he's wearing a mask that's smiling? Yeah, that's me right now when you showed that.
So I don't know. I don't know what to say to people that have never, because they don't think the way I think. If you look at it just as a number, like they say, okay, all you're doing is moving money from this side to this side of the balance sheet.
Mhm.
Nothing actually was gained, blah, blah, blah. It's like, but investing is not about math, right? It's not about math. They can try and make it about math, these value people. If it was about math, then why isn't Paul the best investor in the world with his software, or Jimmy invests? No, it's about people. And dividends are a representation of the business itself to me, and what the management values. So it's a commitment to the investor to some degree. I mean, it's not 100%. Nothing in investing is
I
solid,
feel to add to you, but
yeah,
once you're done.
It's a commitment to the investor, because not every business, I hate to tell people, cares about the investor. They say they do. Fucking Palantir, they don't care about you. So you're just a pig to squeeze. But you hear a call from like Broadcom or somebody that actually has a growing dividend. They have a commitment to return capital to the investor. And more importantly to me, they have to make that decision. Do we pay an increasing dividend, or management has to make this decision. Do I increase the dividend, or do I invest in some new endeavor? They have to make that choice. So they have to tell me that their new endeavor they're going to put money into is worth more than giving the money back to me. They have this decision to make. Meta doesn't have that decision right now, right? There was no decision about a dividend or going into the metaverse, right? So would you have wanted a dividend over the metaverse expenditures? No, you wouldn't have, even if you knew what happened. Say, no. What if the metaverse is still a pile of shit in another 5 years, like it is now? Would you have wanted them to at least consider a dividend or doing that expenditure?
Well, to be honest, I would have actually preferred in their case, because they got so cheap a buyback. but yeah, okay, I see what you're saying. If I know the end result is going to be negative on an investment, I 100% would rather the dividend. 100%.
Yeah. I mean, we don't know the future, but I just want them to consider the two options, management.
Yeah.
That's it. They can make either decision. And I've heard businesses do both. I like special dividend policies too a lot.
Oh, I love them.
I think that's why Agco and Packer, I really want more industrials to go that direction with their dividend policy. But if they're an aristocrat, the dividend aristocrat status is so important if you get it that you want to protect it. But for the ones that aren't at aristocrat status, I think a special dividend policy probably is the way to go.
For those wondering why, well, first of all, dividend aristocrats after 25 years, correct?
Yeah, right. Yeah.
And then the reason why you want that, for anyone listening, and it's like, why do they care about that? Well, you get a certain premium assigned to your shares that lowers your cost of capital, improves your competitiveness against your competitors, because your cost of capital is lower. You can afford to take on different projects that you couldn't before, or you could create a wider spread between your cost, again, your cost of capital and the project you're taking on, increasing your general returns. So, yeah, but going into the adding fuel to your argument, by the way, on the irrelevancy side, I don't really know a time where companies, I can point plenty of times that companies aren't valued appropriately to their cash pile. By the way, Caleb, I saw your comment, by the way. I have something to add to you as to the actual mechanism as to why the stock price goes down. Simply put, it's with the improvements of efficiency within our markets, you've seen the closure of arbitrage. That's all you've seen. So there's a form of investing called dividend capture investing. And dividend capture investing has essentially been removed almost entirely. It's one of the, what was that? I didn't get to see it. Oh my God. What is that?
Do you want to see?
Yeah, I want to see it now. What are we looking at? We're looking at what metric? What are we? Total return. Oh,
3 years.
Oh, yeah. We'll see. It's all about when you buy.
Yeah, I'm fitting my narrative around the metric.
You know, and I told you the story about Carrier. I bought Otis instead on the spinoff. I should have bought
But
Carrier.
I don't know, like it's the same, but buying dividend stocks is the same as buying any individual stock. It's the same endeavor. You're trying to find value, a company that's undervalued or something that'll get more valuable in the future. So, but I mean, some dividend investors just get so drunk on the current dividend. Like I can tell you some YouTube, I don't want to name drop them, but there's some YouTubers like that. They want, and they will front load their dividends today, whatever they can do to pump it, those Yieldmax things or Jeppy. And you're just shooting yourself in the foot in the future. You're not taking advantage of the growth power of a compounding dividend, but they should be looking for the future dividend aristocrats, not the ones that are in existence today. Like KLA or Carrier could become dividend aristocrats in the future. They're on a good progression. But you have to have the vision to see it, because the dividend yield sucks. It's like 1.5%. So, but if they stay on the trajectory they are, you could get to that aristocrat status at a killer deal.
I have a question for you and anyone watching. When does the stock price fall on the for the I almost said the answer, for dividends? On what day? What's it called? Is it the declaration, the ex-dividend day, or the payday? I'll give you those three options, A, B, or C. Declaration, ex-dividend, or payday. And we already have the answers coming in. Good.
This will be part of Fabio's course. So,
yes,
for $9.99 per day.
$999 per day, and we got it in. So the ex-dividend day, correct, guys. The ex-dividend day, when the dividend is assigned to the shares given, that's when the share price will fall. Okay, why not on the payday? That's when the accounting transaction occurs. So my point with bringing this up is it's a misguided assignment of fault. People are assigning the fault to the dividend per se, the actual accounting occurring. All it simply is a removal of the arbitrage that can exist, and that's it. So, because if you, in theory, right, you could buy on the ex-dividend day and then sell the next day for the same price, quote unquote, if the market didn't react fast enough, and attribute the change in price to that dividend value. But that's not necessarily the case. It's not the actual accounting transaction that causes the price to drop. It's the closure of arbitrage. So way back in the day, there was a form of investing called dividend capture investing. I already mentioned this earlier. And you can't really do that anymore. Try to do that now, you're probably going to fall on your face. Rick will become a dividend risk. I am a strong believer in Rick.
They might.
Hell yes.
They'll create their own category.
Oh my gosh, yes.
Dividend colossus.
Yeah, you know what they should do? They should keep it always at $1, and then every time they increase it, so $1 per share. So they just keep splitting their stock as they increase the dividend to keep it at $1 per share. So you're always paid in dollars.
Nice.
Thematic.
Wait, what is that called in crypto? Stake? No, the dollar pegged.
Pegged. It's pegged at $1. It's
pegged.
It's pegged at $1 amount. Yeah. As they increase the dividend, they start just splitting the stock to keep it at $1. Administration costs be damned. But yeah, that's a key reason that people who are critics of dividends, they always attribute the fall to the dividend itself and not just the closure of arbitrage that exists. And like I said, the cash value, I can point to plenty of companies that don't trade on their cash. Some of them even trade very close to, near cash values. Like there was a company, not Generac, sorry, Gencor. I talk about them a lot as a case study. They've recently rallied a lot because they were a play on interest rates because they had so much cash on the balance sheet. And, they are trading at such a cheap valuation. Like their enterprise value was like 20 million. And we had a market cap of, to give you guys an idea, I think at the time it was like 130, 140 million. So they had over 100 million in cash. I think they were making more in interest when interest rates were low than they were in their operating business, to give you an idea. It's like, what? And, it got below book value for plenty of time, right? For plenty of time. Not to get into like efficient market hypothesis. We're not getting into that, but my point being, it's like I can point to examples when market doesn't really care about the. Let's go to a bigger example. Sorry, this is a better one. Dell and VMware. I mean, Dell had an asset on its books that was valued, I think, at over 130%, the whole value of Dell. So just like all of Dell was worth zero, and the stake it had in VMware was worth 130% of it.
JC, that sounds like BOGO investing right there, doesn't it?
Oh, the Dell thing?
Yeah.
Well, I played that.
So
I played that.
or who said that about CVS? If you buy,
Cameron Stewart.
yeah, you get one business for free. So.
Yeah, that's not true, because he's using what they paid for it. I was using market comparables. Just grab VMware, which was publicly traded, their market cap, and see what Dell owned of it, 80%. What was Dell trading for?
No.
There you go. Pull up Armando's comment. You can't do it. Like the arbitrage is closed. The ability for a retail investor to do this, you're not gonna be able to do it.
There's been many people that have tried the dividend capture investment play.
He quit YouTube Finance.
Yeah, he does Ukraine war videos.
Huh. Well, if he died on options, he learned a very expensive lesson.
The only thing, like, people don't, like, if dividend capture worked, it's impossible. It can't work, because if it worked, the whole market would be destroyed, because every super investor would just do this and make money all the time.
Expand on that. That's why that's why the stock falls, because
that's what people like. If a strategy always works in the market, it's impossible. It's an impossibility, because there's only the markets don't create money, right? So you can't create money out of nowhere. So if everyone succeeds, there's no failure. Then,
but has everyone captured what he just said? Has everyone just captured what he just said? That's all the drop is. It's the closure of arbitrage. That's it. Exactly that. What Dan just said. So arbitrages don't really exist as bluntly as they used to. Back when the markets were more separated, arbitrages genuinely existed, and traders and investors could take advantage of those arbitrages. As we got into the information age and things just got way more connected, information was a lot. So tack on efficient market hypothesis, tack on that, and you can get an idea. I'm trying to highlight this because this is the biggest criticism of dividend relevance theory, right? Or the biggest arguments from people who are proponents of it. They talk about this. That's why I'm highlighting this so much. It's the closure of arbitrage. That's all it is. They're misattributing the fall of the stock to something else, and they're using it to try to further their argument, which is the dividend is irrelevant because, once it's paid out, it gets closed. I see what they're saying, but that's technically not why. You're observing a closure and arbitrage. That's not technically the same thing. So, yeah, I've done it on preferred dividends before. Preferred dividends are a little bit strange, though, because they're not. They can be very illiquid. So in the illiquid markets, you can find a lot of inefficiencies still. So I'm not proposing you go out and go to like the nano caps, but you can find. So say in the private markets, when I had some involvement in that stuff on the smaller side of things, you'll find crazy inefficiencies on businesses that are like $1 million and below, 2 million, 3 million, even tons of inefficiencies. I mean, Rick talks about that all the time. They're buying clubs at like 33% cash flows.
That's what Bankman-Fried was doing originally.
Yeah.
Before FTX, he was arbitraging crypto between different markets. He found a way to do it that no one had before, I think, between Singapore and the US or something, or so, like, so he found a way to make it work, which no one had before. And he was able to exploit like the differences in prices. He was really good at it apparently. But then he got greedy and then he started his own firm and messed it all up. But
yep. Elementals, well, we'll go Kingdom of Finances question too, I guess, if you want to tackle that one too. Nestle or Hershey? What pick your
is Hershey still
combatant.
dropping?
You guys with your chocolate stocks.
Well, let's see.
I'll go with my office rate just to piss off King.
Seeking Alpha says hold, sell of Hershey. Oh boy. Nestle.
I love Seeking Alpha when it goes like this after like a 20% drop. This stock is at risk of performing badly. Yep. See why.
Seeking Alpha's analysts have more buy ratings on Nestle. So there you go.
You go with that. Yeah, you're picking. It's not irrelevant whether a company pays a dividend. It's irrelevant whether you invest in a dividend stock or not, because the market is pricing in the benefits and costs of the dividends already. Trying to unpack that, but generally speaking, I think I agree with your comment. You didn't hear my previous comments, I think, way back when, or both of our comments talking about like the market will attribute some benefits to the dividend. And like, for example, when you achieve aristocrat status, what tends to happen is, of course, elevation in because of inclusion in various indexes, elevation in the valuation of the company, and then subsequent lowering of cost of capital, which is a reason why companies might want to attain certain statuses. And then they're like Dan was explaining, there are trust bonds that you build almost with your shareholder base, and you're rewarded with the higher valuation as well, if you think about it. And that makes sense. Again, similar benefits, lowering cost of capital, etc.
Yeah, I mean, there's not infinite uses for excess cash for a business. I don't know why people demonize dividend, because there's different options. They can hold the cash, pay down debt, buy inventory, purchase a company, dividends or share buybacks.
Mm-hmm.
There's not much more. That's it. Dividends are just one option that they have. And as an investor, right, some of those options suck for you as an investor, that you would hope they don't buy terrible assets. Holding cash doesn't necessarily help you as an investor. It's good for the business. So it's just an option, and it makes sense for companies like McDonald's, Lockheed Martin. I think even Carrier can pay a growing dividend. I don't think it's stunning their business at all. It just depends. But
I agree. I can name, and going on buybacks, like, oh, what's the alternative buybacks? I can name maybe all the companies I can think of in two hands, maximum, that have done effective buybacks consistently. Maybe a little bit more, because I think you have, okay, let's go. O'Reilly, AutoZone, that's two. I argue Markel has been pretty good at it because they've been very selective. Rick has a way to show us. Musa, Murphy's USA, has done it. Cannibal. PayPal is doing buybacks, but I can't count them yet because they haven't shown us that they can do it. Trying to think. Apple, you could argue. Apple's proven it.
Lockheed Martin's got a really good record of it.
Lockheed Martin, will throw that in there. I didn't think of them, but there's more than just my two hands. But I'm trying to think of it. The point what I'm trying to make is it's very few and far between. A lot of companies will just like have blind buyback policies, and they'll buy at whatever valuation. They'll just say like, we're returning $500 million to shareholders.
Yeah,
blah, dump it into the market, buy up stock.
When you have the cash to buy shares back is when you're doing well as a company, which means your share prices are probably pretty high. There's not going to be a correlation of the share price is taking a nosedive, but yet the business is doing really well. I mean, if you can find those, amazing, but that's going to be few and far between.
By the way, the only reason why I gave it to Apple is because they started that huge, disgusting buyback program when they were at lower prices. I don't agree with their current stance. I would be hoarding cash at current valuation for Apple. I'd just be piling on cash. and I'll just wait. I dare you, market. Give me an opportunity
No,
to buy back my stock.
I think they should have bumped their dividend up more and held cash. Yeah.
Yeah.
At the prices they're at right now, the dividend they or the share buyback, they probably should have mellowed out with that. But,
Yeah. And Elemental says another point. My main problem with dividends is you buy company with post-tax. Oh, this one first. My main problem with dividends is you buy a company with post-tax money, you get paid back parts of its value with pre-tax money. Other than that, I agree. You don't get paid back parts of its value, because that's kind of like you're buying a productive asset that will produce a stream of cash flows here and out and into the future. When a dividend in principle is just supposed to be a sharing of those produced cash flows to you, you're not selling the production of, because cash is not a productive asset. The cash, this is the point that you missed in the stream. I'll repeat it for you. Like dividend relevance is assuming almost that every line item in the balance sheet is all the same thing. Instead of a distinct separation, okay, well, cash is different from PP&E. PP&E is not the same as, let's say your branding, et cetera. But my point is, like, when you sell a stock, you're selling all the future potential of the production capacity of that asset. And so if you were trying to realize the value of your investment only by selling, it's not the same thing as receiving a dividend. A dividend is just a deduction from the cash component and then going into your pocket. And then you remain with all of the other assets. You own all of the other assets that are producing the cash flows. All that's happening is just subtract the cash, and then the cash doesn't poof disappear just into your pocket. And that's all that's really happening.
So when people say dividends are irrelevant because of taxes, I don't know what to say, because the initial theory was made under assumptions that taxes don't exist. So you can't, it doesn't make sense to say that. You can't say it. They did not consider taxes when they made that theory.
The tax argument, I gotta say, they include it. Usually the detractors include it because they say buybacks is a superior method. So they usually say dividends are tax inefficient, buybacks are way better because they're tax efficient. But like I just said, I don't know how many companies have amazing buyback programs. Like Dollar General did the most aggressive buybacks when they were above $200 a share. And you're just sitting there going like, what were you thinking? You were at the most elevated multiples you've been in your entire history. Why did you say, oh, we're at the highest multiple ever? Time to buy back some stock. Oh, and by the way, we're going to do it at high elevated levels. Never in our history that we've done it. Oh God. And then, you have other companies. Let's use a good example. Murphy's USA. No, I own Murphy's USA. They're like, oh my gosh, victim 1 and victim 4. But the tax component, I think, like the cost of the buyback return of the failure of execution is far more costly in the end than the taxes you pay, if I'm being honest. So. This is my problem with dividends, not the dividend irrelevancy theory. I think in general, dividend stocks are better than tax managed accounts, but just because they have less buying from taxable accounts.
I don't.
What is that? I don't understand what that means.
All I can, like, in everyone, like I said, everyone's stuck on the math, but investing is about people. And I'll hold a dividend paying stock even if it's red or the market goes flat, when retail will just sell shit, panic, which people always do. It's fine, because once it goes red, if you don't have a dividend, what do you have to look forward to? If you're holding the bag on Palantir, like, there's nothing. So they'll probably just sell it. But yeah, I wouldn't tell anybody to do dividend investing if you think dividends are stupid. Like, that's insane. Why would you do that? Like, you have other options. You can buy index funds, or you could try and be a growth investor, which I think sounds like worse than death to pick growth stocks. But Good luck. Maybe 1 out of 10 does well, I guess.
And like I said, why I started with the very beginning part of the conversation 40 minutes ago, when I was giving that example, the only reason to invest in anything is that you believe there's going to be some sort of return. You don't have to receive it today. Let's say Palantir. Hopefully, your philosophy is that one day Palantir's cash flows will be so great that it could return a crazy amount of cash flows to investors. So why would it stay at whatever market cap it is? Let's say it's 30 billion. Why would it stay at a $30 billion market cap? Because in the far future, it's going to be producing $30 billion a year in cash flows, and it's going to return $15 billion a year in the form of dividends and buybacks. And so, of course, the market cap will rise, even though throughout that period from when it gets to point A to point B, it's not paying any dividends or doing any buybacks, because you're investing and you're benefiting from the market rewarding that potential return in the future. So if lots of money isn't buying dividend stocks because they don't want the taxes, they keep the prices. I don't generally think that that's something that's actually been taken into account. So
yeah, the stock doesn't know what the taxable status of the person buying it is. I mean,
I see what he's saying. Basically, like there's appetite. There's less appetite for I don't think so.
the dividend community is pretty damn big, actually. I mean,
no, even in funds, I don't think that that's the case. And I kind of tend to think, especially when you're trying to get into like, endowment funds who have a tremendous amount of capital, pension funds who are, all together are much more powerful in the markets. I don't really think they're caring about that. I mean, you're maybe talking about, but I don't really think they do all too much. Ultra wealthy and retail maybe focuses a lot more on it, but yeah, I used to hate on dividends because they don't invest in themselves, whatever that means. No, okay. You want them to invest in themselves, and then in any excess, that's a judgment call you make as an investor. You're like, why are you paying me this dividend? You have these projects that are yielding 30% plus. Like, stop giving me the money. Go increase.
Okay, this is the one. What do you, I guess this could be the end. We're getting pretty late. So like Broadcom has always been a dividend growth machine. It's probably been one of the best dividend payers. I mean, at its size, the payout ratio to the growth. I mean, that's a
I did not know that.
That's a beautiful stock to dividend growth. But they're at this point, they have so many opportunities. So they've been dumping all their cash into growing the dividend, but they've got opportunities in AI, right? Or other avenues with chip development. So they're at an interesting crossroads. I'm not invested in them individually, but I'll be curious to see, do they keep continuing these massive dividend growing streak, or are they going to pivot to more CapEx into some other endeavors that when they see that AI is going to be so big. So yeah, we'll see, I guess, company like that. Or are they just going to keep growing the dividend hugely because that's just what they've been doing? It's one to keep looking at.
They're probably going to grow it still, but maybe at lowered levels if there's a lot of projects around that could yield higher returns.
Mm-hmm.
But yeah.
This guy says sell it. So.
Oh, whoa! Elemental bought a put on Nvidia. Elemental, I'm curious because I haven't checked them. Are they? What duration and kind of what price are you looking at?
But wait a minute. Let's see if I can.
I am short Nvidia. Do not short Nvidia along with me. It is very risky. I am down a lot of money. I'm okay with it. I am down a lot of money. I'm okay with it. I am down a lot of money.
Oh my God, that is so funny.
I told Chris I was going to make a 10-hour loop of that and put it on my channel.
That is good. I love that.
And then he bought 3M, which is just such a. He's like the final boss of value trap investing at this point. Like,
no, his return rate is literally abysmal. But the thing is, though, when the stocks do work out, I not certain he has. I don't think he has any of the amount he needed. He was so heavy on Baba, and then he lied. He had only 1%. He probably sold it.
I don't think I've ever heard him make money on anything. I can't think of anything he's bought that just went out at all. Like it goes sideways and then slowly dribbles down most of the stuff he buys.
I actually don't know
Smith
what
and
their followers
Wesson,
like.
Carnival Cruise Lines, like the stuff he admits he bought. But
yeah, I don't really know what his followers are doing. Like there's nothing to look at and say, oh, he put his brand, he put everything behind X and it turned out well or it turned out poorly. Like there's nothing that he I mean, there's actually only negative ones. Yeah, that's right. And then his claim that when he got mad at Chris, he said like I made 5 times the market return with being only 50% invested. It's like
people are gonna hate me, but I keep saying I don't think value investing works the way I see it on YouTube with their DC models and stuff, like exclusively that. I don't think it can be successful.
I know.
Like what you do, you've blended all these different theories and applications that I'm aware of into one research. Like people, like you have a model, I know you do, but you have all these different parts to your investing strategy that I see from being an investor for a long time. So yeah, you can use a model as part of an investment process, but by itself, you'll never succeed. I don't think. There has to be something more to you. So
yeah, I like to say like modeling, if it's designed well, modeling can be a powerful tool to help someone who knows what they're doing. That sounds like so much hubris. I feel bad saying that, but like as if I'm claiming to know what I'm doing. I could not know what I'm doing at all. But if someone knows what they're doing and then you model alongside that and your model is well designed, it can be a powerful tool. But if in the model in the hands of someone who doesn't know what they're doing in the first place, it's kind of like giving a chimpanzee a calculator, right? And they're just going to look at it. And it's a powerful tool. It can do a lot of, like a TI Inspire. You give them a TI Inspire, it can do all calculus, and then they're not going to know what to do with it. But you give it and put it in the hands of an engineer or a mathematician, and they can solve complex problems with it. Same thing with a solidly designed model. Everything Money is a very poorly designed model being used by people who have no idea what they're doing. So the result is extremely predictable in every stock they're going to input. It's always going to be.
He thinks his model is applicable to everything, and like. There's models for different types of companies. If you go to the Dean Evaluations website, he's got like 100 models for all different purposes. It's not a one size fit all.
Look at Dex's comment. He wants us to check out.
You want me to do
laugh.
it?
Yeah, let's have a little laugh. Let's look at. Well, I was saying look at Southwest because he gave us the date.
Okay.
But you could pull up the video, yeah.
Southwest. Let's see if it.
Kingdom, you know the answer to that. Of course they would never.
It's not this one, is it? 1 month ago?
Oh, no, they probably updated it, but June. Oh, no, June is like 1 month ago, right? Sort of. YouTube.
No, this is. Okay.
No, this is their update video, 100%, because their other one, they had another one that was 2 months ago. That was the video.
So you're taking individual stock risk for 2 to 4% gain over the market, like because they say the market returns 10% is what they're basing this on. So
that's a poor.
Why would you buy an individual stock to get a 2% gain over the market?
Can I give everyone like a little secret? Did everyone notice? I don't really go into this too much, but did everyone notice? 2021, what were my if you go back in my videos, it's not like a secret, I don't hide it, but like people don't really ask questions, but I'll bring this up now. But like what discount rates was I using 2021? I'll tell you the answer if no one guesses it, but it was very high.
Like I get like Like when I bought Tractor Supply like in the 160s, I'm like, this company's going to be worth $400 or $500 a share at some point in the future. I'm not going for 4% gains.
No.
Like everything money's like, why would you do that to yourself? 4% estimated return per year. Just go by the market. But
yeah, you're saying an excess current price return. Yeah, like so their first value, their low valuation would return a 10.37%. And the other one would return 28.16%. And that's, I'm guessing, annualized.
oh my God.
They should actually call that annualized rate of return. So
Why would you buy airlines? Don't buy airlines.
well, Southwest, to be fair, is the only one I would buy. But yeah. What is that? The year to date? Oh wow. Oh wow. So it came right back up and then right back down.
I just have a problem with companies where the government has to demand that they spend CapEx, like utilities and airlines.
Utilities, I kind of
nuts, but
I get
or
that
telecom,
one.
where like they have to be forced to spend money even if they don't want to. So you're taking management decision making out of the equation to some degree with these companies. I don't like, but
well, we could say it this way. We could rephrase it. Well, I think utilities are weird because, utilities profit. I have to refresh my memory on them, but the business model is very interesting. Like electricity companies, they make money from the actual development of the infrastructure, not so much what they charge you. It's kind of weird, but they maintain the system, but that's not actually how they make the profit. I got to refresh myself on it, but I don't invest in utility companies. But yeah, I used to when
that's probably
what is
broken.
This?
But
what is this?
Duke Energy. That's probably not right.
Oh yeah, it's 100% broken. They're also very net dilutive. Like that's another thing about these guys.
Yeah. Utilities don't. Yeah, they issue shares.
I mean, they've actually been pretty stable, 707 to 770, and then they were up, down, up, down, up, down.
This is one that a lot of dividend people. I think Gen X Dividend owns this. I think.
I do not know why you would. Because I don't even think it provides that much stability in a portfolio. No. Just buy something else, and by the time you're retiring, the dividends per share are probably going to be significantly better. I'd be more comfortable owning, like I'd consider like a bank, a better kind of utility than a utility. So
I don't see what the point of these would be. I don't know.
I see the point in you have, because it's a low beta. Well, I don't know about now because like Hawaiian Electric, there was the utility company in California. I forget their name. They also they filed for bankruptcy when the fire happened and it was their fault. You remember that one, the Californian one?
No.
So I'm just like, all right. So all of these guys are just like ticking firebombs. And then there's a fire in, I don't know, whatever state Duke's in, and the stock just collapses. So, because the whole point of buying these is like, okay, low beta investment, you get your dividend, small little growth here and there. What is it? WEC? Emperor Saran said it. Yeah, I know it returned a lot if you bought it at post chapter 11. Or was it
my DGen play of the week? I bought this about here.
I saw.
And then I sold it over here before the end of the day when I was talking to you today. So.
Oh yeah, I saw your comment.
I did all right with it.
Yeah, you did really well. I didn't have
the balls. I don't want to say how much. You don't want to know.
Yeah. Oh, I don't want to know how much.
No, it was a 5-figure. I'm not saying.
Oh, I did pretty well. Yeah, you got basically, like you contributing to the family vacation fund.
Yeah. Actually, yeah, I don't know what I'm gonna do with it. Now I got to pay my treadmill off. I'll pay the treadmill off next to me. So
you change your name to Dividend Dan to Trader Dan or something like that.
Well, I don't. Okay, see, I can't brag. Well, you're here, but this has been beautiful because I got this. Where was it? $4, right? No, where was it? Am I missing it?
Oh, you're on the 5-day. That's why.
Oh, Jesus. One.
The 5-day chart's extremely
broke. Oh, here it is. Yeah, when it popped here, That's when I got my puts. So I waited for news to pop the stock, which is kind of
Dan, why aren't you sharing these trades with me? Sometimes I'm at work and I don't have the time to find these things. You got.
It's part of the steps. You wait till you find a trash company, but then you wait for a pop in the stock, and then you ride it. I don't know when I'll get out, but I rode Vorb all the way to bankruptcy, the other Virgin Galactic one. So
you got to share these with me, man. Oh my gosh, like.
I will say again, you do not short or puts on valuation, people. Like, it's not. These are fundamentally flawed businesses. It's not about valuation. So they can't make money. They can't make money in their business. It's like impossible. Anyways.
So you're just watching these trash companies and just waiting for good news, and then you're like, "Up, time short."
I have like 5 or 6. I'm watching, and I wait. There has to be a pop in the stock price though. Gives me that extra bump security, I guess. So otherwise, I just let it go.
Alter ego. I don't give a damn. Oh, and Kingdom. Oh, just you wait. Just you wait. Okay, just you wait on the Musa versus Kushtard.
Did you remember? I shorted Plug Power and I called it. I don't know if you remember. I messaged you and said I was doing it. It was at $25. I called my shot and I rode it all the way down to about $12. So, but I know stuff about them. They're a local company. So
no, you didn't know. So I had a small position in Plug Power back in the day. I actually wrote it. I sold it at. I didn't write it all the way to the top, but I sold it at like 39, 40, something like that.
We have locals here that made a lot of money that work for the state because it's kind of a celebrity company, right? Their headquarters is 5 minutes from me. So people were buying it for pennies on the dollar here. People I work with, but then they didn't hold it obviously all the way. They sold it at like $2. So you make out good, but not, you missed out. So.
Oh gosh, everyone's coming in and saying like, what about CrowdStrike? What about Etsy and Amazon?
It's got to be in my wheelhouse. Like, I don't think I'm not I don't buy software companies. You've noticed because I don't know anything about them. My play is SCHG.
You should just trust me, bro. Just like
I know nothing about software, so I don't really buy software companies. Like, I don't know.
Yeah.
I mean, I'm an accountant, so like I don't know, like I can look at the management will say something and I can look at their finances and be like, there's something not amiss or some news I can find. But to make a living shorting, I don't know. Like that seems hard.
No, I mean, like,
it doesn't happen that much. It's not like something that's always clicking, right? It's occasionally some spark hits you, and
really, you got to find the next fraud. You got to short Disney.
If I find something, I don't know. It's got to be not valuation. So,
yep. I mean, don't worry, Dan. The programmers don't know. That's actually funny because Elemental's a programmer.
Oh my god. Yeah.
Yeah.
Oh boy, we're at 2 hours.
Yeah, we did it. And remember, this is after I did the call, man.
Just 9 hour. Jesus, 9 hours is back free.
Yeah. I have a problem. If it's about stocks, though, I can like literally go on forever. It's not I don't even consider it work.
Well, just for you, I'm going to get up and work out before I go to the Scottish Games in my area tomorrow.
All right, I'll make you a promise. I'll do my run in the morning, which I already planned to do. So
I'll do
act like it's a promise now.
600,000 legs workout, like you were talking about. Squats around the world.
Yeah. Motley Fool recommended Etsy stock. I'm screwed.
What? It's over.
Are you still own Etsy, my man? The bet is the bet's through. It's been a year, I think. It's been a year. Yeah.
So anyone that wants to, or anybody watching this, go join Capital Mindset if you want more of this terrible commentary.
Oh yeah. So yeah, we have fun in there.
You get a BOGO deal. You get both. Fabio. I'm in there too as a mod. So
Yes, and Dan does actually share with me some of his degen trades that are not so degen, and my God, like he's just made.
I feel like I will never.
Oh.
I'll send them to you personally, but I feel like such a jerk trying to call stuff beforehand.
No, wait. Let's remember you.
I
And
did call
Nakuda.
SoFi. Do you remember? I told you it was going to run up to like $10.
Well, I did participate in that one
because you jumped in right before me, and then
Yeah.
I jumped in, and then I think I got out before you. I chickened out, but I was like, it's going to run to $10, and then it'll come back, and it basically did.
Yeah.
So we both hate it, and then we were like, we're going to profit off it.
We've made more money percentage wise in SoFi than
guarantee
any of
you.
the SoFi bulls, which is
Oh my
fun.
God. Yeah. Because when it started running from 4, I'm like, oh, it's going. And Jesus, those people. What a terrible company. The video we made, I regret nothing. It's still a terrible company. I don't care.
Oh yeah. No, it's not a good bank. I want to call you out for FRC. You and McBuda. Oh my God. You guys made so much money on FRC.
I did. I kept going in and out of it for like 5. People hate me for that. I went in and out of it. Well, people in the community know.
Yeah.
So, and then Fabio sold it, and I was like, stand together, people. And then PayPal announced he was going to put money into it, and it ran again. And I'm like, yes. Did it? I made money on 4 of the 5, I think.
Yeah, no, I was just in awe, and I was like,
Schwab called me and threatened to shut me down as a day trader because it was too many trades back to back. So,
oh my gosh, that was such a funny moment in the community, like the FRC days. You and Big Buddha.
That was social arbitrage trading for me, mostly because I was betting on JPOW or someone recover or coming in to seize the day with FRC, which is what happened actually. So.
Yeah, and then at the very end, you know what? I'm so surprised that another bank like a Goldman or American Express, they should have bought FRC because it was pennies on the dollar. It could have been anyone, but like American Express should have done that. You know why? Because this will be the last comment. I don't want to hold you up as we're over the 2 hours. American Express is now trying to get into the high net worth banking clients. It's like, really? My guy, you could have just bought FRC.
They were there already.
Yeah, what is wrong with you? Like management, I guess maybe they tried and we just don't know. And the JP Morgan offered a better deal.
Maybe they had cold feet about it. Like they didn't want to get crushed or like time crunched or something.
Yeah, I mean, American Express is probably like one of the only banks that I would say is a buy and hold forever.
See, Bacon has like, that's why I want to change my name because I don't want to just talk about dividends. And so I was thinking of just changing it to my name, but.
Oh yeah. You just change it to Dan. Yeah, that would.
I'm not going to teach people the puts the way of the put. We're not doing that, but. So, oh God, these comments. All right, well, I guess we'll cut it off. So, when's the next something? 2 weeks from now, next live Fabio live stream.
Oh man, I want to do it sooner rather than later, but hopefully I can plan one out. I've been trying to calm down with work because as I'm in the transition from the current role to a new role, and then so things are calming down for me as I kind of just go off projects. They negotiated that I stay a little bit longer, which is fine, and it extended my stay here by about a month, which is fine.
Jesus.
Yeah, but it's fine. The negotiation, obviously, it was because they gave me an offer and I said yes to the offer for the temporary stay, the extension to help out with certain things. And then the next opportunity was complete understanding of it. And so that actually aligned so I'm going to have like a 10-day, instead of a month window, I'm going to have a 10-day window where I'm not going to be a full-time YouTuber, unfortunately. So I'm sorry, everyone. I can't be a full-time YouTuber. No, I thought I was going to have a month of being a full-time YouTuber. Nope. I'm going to have 10 days maybe. And that's I'm going to be traveling, getting everything moved in and stuff. Moved out and then moved in.
Do you want to answer this or?
Wait, what? Schwab called you. Is that because you have to aid by certain rules.
The
If you
day
are,
trading rule.
yeah, you got to have over $25,000 in an account. Otherwise, you get called as a pattern day trader, and they will literally put a freeze on your account. Not that you can't move money, but you won't be able to trade in and out of stocks for after 3 business days. Like you'll have to wait for your money to settle and stuff.
Yeah, I don't keep that much in my trading account. So yeah, and then there's like settlement times. If you're going in and out, you're gonna get in trouble.
Net worth exposed now.
Don't you have to have level 2 to not have that problem, right? Day
Level 2.
traders have level 2 trading or something,
Um,
or they pay a fee. I don't know. I'm not a day trader.
No. I don't have that experience after 20. Actually, I saw one in my business broker because my BIAs are so weird. BIAs are under completely different rules, and I'm not too much of a fan, but it's fine because I'm mostly just long and holding and not really doing anything crazy. But like BIAs are a little strange. Like you can't have leverage in multiple accounts, only in one account. They'll only extend you leverage.
Oh shoot!
Even though you have multiple accounts, but in a personal, that doesn't apply. Oh, very final thing. Swear to God, no one asked a question after this, but what do you use for your high yield savings?
Me, it's my local community bank. They have money market accounts.
Oh, okay. So it's money market funds and stuff.
Yeah.
You get high yield. Okay, cool.
I didn't do an internet bank. I did Marcus for a little while, and I got annoyed for how long it took to do transfers between that and USAA. It was taking really long, and so I closed it.
I'll never know what USAA is like, sadly.
You know, apparently people are pissed at them right now, saying they're in trouble. But
boo USAA because they won't accept me as a customer.
I think it's the best internet bank.
No, I know. Bacon always hypes them up to me. Bacon's like, the best thing about being a veteran is USAA. I'm like, wow, really? That's the.
I don't really care about what the bank offers me, like percentages. I just want them not to say no to me ever. Like USAA doesn't say no if I ask for something. So I value that more than SoFi paying an extra 1% interest, I guess. So
yeah. USAA is not publicly traded. Don't play with me like that.
That would be really weird.
Yeah.
They're membership owned, actually. So I get profit sharing from them.
They're a community bank.
Yeah.
Right. How much yield are you getting at that local bank in the money market account? 5?
It depends on how much you put it. You're in like 3%, maybe, I think.
3%. Why aren't you going for those internet banks that give you, like Apple Savings gives you like 4?
I just don't like to. I don't want to add any. I'm already dealing with 3 banks. I don't really want to deal with anything
complexity.
else.
Gotcha.
Yeah.
Gotcha. Yeah.
I see the point, though. I mean, it's fine.
I got super hyped when I found out about the Merrill preferred deposit program. I was like, oh, I can keep everything here.
Oh yeah, that's cool.
So yeah. All right.
So thanks for joining us. I might have to timestamp this. A lot of topics. So thanks for watching. I'll see you later.